The market's already casting a vote, I guess, though, about some concern there. We've seen the VIX jumping a little bit this week. How would you describe liquidity conditions?
Well, like you said, it has been a wild week in terms of each specific move on each day. We're still up on the week. But despite being up on the week, the VIX is either flat or maybe up small. And the VVIX, which measures VIX volatility, is up. So there's still a lot of concern out there. The main reason those VIX and VVIX are remaining on the higher end and staying firm while the market rallies is because investors are more worried about the downside tail options. During the the inflation and the Fed and the higher rates of the last year, that was pretty well known and priced in. But at least from a volatility perspective, now we have this new kind of unknown kind of bank issue, and that's leading to much more demand for downside put protection, which increases skew on something like the S&P 500.
A lot's been made, Chris, of the fact that Treasury liquidity is not what it used to be. And people are obviously concerned about that, especially when you see 12 standard deviation swings multiple times in 1 week. Is that a problem that's unique to the Treasury market, or is it any sign of a broader concern, maybe starting with people backing away from perhaps equities or options this week?
No, I think that whenever volatility is higher and uncertainty is higher, markets are going to thin out and they're going to get wider. But the use of ETFs, even for example the KRE ETF, sure, it's down a lot, but it did absorb a lot of supply and it was used as a vehicle for directional exposure. So I think the increased usage of options and the increased usage of ETFs are actually, in some ways adding to different avenues for investors to hedge their risk and in some ways providing extra liquidity.
Has there been any direct impact of the banking problems onto Wall Street? In other words, onto the accounts that people have, the trades that they're making? Obviously, Charles Schwab has been one of the names in particular here. Do you discern any direct connection here?
No, not that we're seeing. I mean, obviously, we're trading with institutional clients that are backed and clearing through the OCC. So not really seeing anything too crazy. When you have uncertainty over banks and liquidity, of course, volatility is going to be higher. Of course, the VIX is going to spike. But kind of going back to the U.S. Treasury volatility, if you're going to look at something like the MOVE index compared to where the VIX is, it's not even close. Equity volatility is hanging in there a whole lot more than Treasury volatility if you look back historically and you were just to compare the MOVE index to the VIX.
So the forward rate versus kind of option spread, I don't know how you guys pronounce that for the lingo. When we start to see these things widening out, when we see overnight rates jumping, is that something that concerns you, or is it just kind of, okay, well, things seized up this week and we can kind of go back to normal as it shakes out? What is the message that's sending?
Well, yeah, I mean, I think once again, it's a typical reaction to what has been going on, and when we're looking at the options and I believe that the VIX, it's kind of going back and forth, but the term structure is not even inverted right now. And if you look at something like the S&P 500 and you were to compare the total size of the whole financial sector compared to a number of the big FANGs, the part of the reason why the equity market, if you just look at the S&P, is hanging in there is because of those, big tech stocks. So as of now, it's relatively contained. Once again, the S&P is up 1.5% this week. So we're not necessarily seeing quite as much of that kind of stress in the options and the equity volatility markets.
All right, great. We'll let you go. But I'm just looking in particular, your notes of Bank of America, for instance, seeing some volume, even American, Carnival. What can you say about that?
Well, the great thing about call options is, if you are not sure that the stock is going to rebound, but you would like to take a chance, and you got the Fed event looming next week, you can look at, we saw a lot of call buying in Carnival Cruise, American Airlines, United Airlines, Bank of America, just to name a few. But we certainly are seeing underinvested investment community still want some upside exposure via buying call options.